Hello students, this is the second video on valuation of shares. Already first video I made, in that I have given the introduction of valuation of shares, need and importance of valuation of shares, and factors influencing the value of shares, and precisely I have explained the methods of valuation of shares. In this video, I will explain the net assets method and solved problems of net assets method. So this video is helpful for BCom, BBA, MCom, MBA and CS and CMA students. So these are the methods of valuation of shares. Already I have discussed in the first video. I will share the link of that video in the I button as well as in the description box. Please watch that video. So we have first net assets method, intrinsic value method, asset backing method, breakup value method. Anyway, the examiner may ask you to in the question. So you must understand all these are same, right? Then next, earning capacity, yield basis and market value method. All these names are similar, same for the only one method, that is earning capacity. Either way you can use, you must understand. Then dual value method, it is combination of both the methods. It is not a separate method, right? So in this video, we will understand net assets method. What is net assets method? This method is also known as asset backing method, real value method, balance sheet method, or breakup value method. There are many different names, but basically we will use net assets method and intrinsic value method. So in this method, generally what do? We will calculate the value of share by dividing the net assets available for equity shareholders divided by number of equity shares. How we will get net assets available for equity shareholders? We will make summation of all the assets available with the company. We will take, if it is provided market value, we will take market value. If no market value is given, we will take the book value. And we don't take fictitious assets. In the next slide, I will show you what is fictitious assets. But we don't take fictitious assets. From the summation of all the assets, excluding fictitious assets, we will deduct the external liabilities, which is payable to the external parties. Once you deduct those liabilities, the resultant figure is called as net assets available to equity shareholders. That net assets available to equity shareholders divided by number of equity shares will get the value of shares. Right? This is the precise way of doing the problem solving under net assets method. So I hope you understood the net assets method. Now, how to calculate the value of share under net assets method? Here, the value of equity share is equals to, the formula is net assets available to equity shareholders divided by number of equity shares, right? So now number of equity shares generally and 100% will be available in the question itself, whereas our duty is to calculate net assets available to equity shareholders. Once we calculate this, we can simply apply the formula and get the answer, right? So we will see how to calculate the net assets available to equity shareholders, right? How to calculate net assets available for equity shareholders. For calculation of this, we require to take all the assets excluding fictitious assets. Very important, which assets? Fictitious assets. At realizable value or market value. Then question arises, how to identify, how to recognize fictitious assets. What is fictitious asset? Fictitious asset is refers to any asset which do not have any economic value. You cannot sell that asset, but still it will be shown in the balance sheet. How it will be shown in the balance sheet? Why it will be shown in the balance sheet when there is no value? But as it is a compliance of the double entry concept. To comply with the double entry concept, we need to show that value in the balance sheet, right? The examples of fictitious assets are preliminary expenses. In order to start the business, basic expenditure, primary expenditure incurred is called as preliminary expenses. Debit balance of in profit and loss account, that is loss incurred by the company, will be shown as an asset. Discount on issue of shares and debenture, deferred revenue, miscellaneous expenditure. These are the names of fictitious asset. Whenever you find these names in the balance sheet, you don't consider those assets, right? But you take all the assets other than fictitious asset. Which value? Realizable value or market value. Goodwill as calculated, right? Valuation of goodwill chapter videos are already available. I will share the link in the I button as well as description box. Please watch the valuation of goodwill chapter videos and try to understand that concept. Clear? So valuation of goodwill will be done. Goodwill, if it is given, that we will require to put. Sometimes he will ask you to value the goodwill even in valuation of shares question. Then you must know valuation of goodwill. So very important. So after adding the goodwill, the summation of net assets will be there. From that, we will deduct external liabilities. External liability here refers to liabilities payable to the external parties. That is sundry creditors, bills payable, debentures, taxation to the government. These are the payments which we need to make to the other parties. That is external parties. That's the reason why we call it as external liabilities. But whereas what we call equity share capital, general reserve, P&L account, dividend equalization reserve, all these reserves are not external liabilities. This money belongs to whom? Equity shareholders only. So we don't consider it as external liability. And preference shares, because we are calculating the value of equity shares, therefore preference share capital and any arrears of dividend will be treated as external liability only. This will be deducted, right? In case of debentures also, arrears of interest, if it is there, that will be deducted. So after deducting these external liabilities, the resultant figure is called as net assets available to equity shareholders. I hope you understood this crux of the calculation of net assets available to equity shareholders. Next, we are taking one question from the information given below. You are required to calculate value of share under intrinsic value method. We have 1008% preference shares of 100 each, fully paid. 4000 equity shares of rupees 100 each, fully paid. How many number? 4000. Please bear in mind. Reserves, P&L. These are the internal liabilities. Creditor is an external liability. We have assets, building, furniture, stock, market value is 4 lakh 50. Investment at cost, face value is 4 lakh, but market value 3 lakh 35,000. Then debtors, bank, preliminary expenses, one of the fictitious assets we should not take. Building now worth 3 lakh 50,000 and preference shareholders are having preference over capital. Of course, preference shareholders always will have preference over the equity shareholder. That's the reason why they are named as preferential equity or preferred equity, right? So we have provided this question and we are asked to calculate the value of equity share under intrinsic value method, that is net assets method. So when you come to the answer, the value of equity share is equals to the formula net assets available to equity shareholders divided by number of equity shares. Whereas number of equity shares we are already aware, that is 4000, right? Denominator we have number of equity shares, whereas we don't have the numerator. So that's the reason we need to calculate net assets available to equity shareholders. How to calculate? We'll prepare a table, right? Particulars amount. We take all the assets agreed or realizable or market value. Either way you can call realizable, market or agreed value. Building, there is no adjustment value. Sorry, adjustment value of the building is given, that 3 lakh 50,000. So market value is 3 lakh 50, therefore we will take 3 lakh 50. Then we will take furniture, no market value is given, therefore we take book value, that is 3,000. Then stock market value is given 4 lakh 50, the same we have taken. Next, investment we have given market value, that is 3 lakh 35,000. Then next is debtors 2 lakh 80,000. Then bank balance, there will be no market value for the bank because bank is a cash and bank will have same value, that is 60,000. As I told, preliminary expenses we don't take since it is a fictitious asset. Then we'll make the summation, 14 lakh 78,000 is the total of assets. From this we will deduct external liabilities. We have only one external liability, that is creditor. Once you deduct this, sorry, preference share capital is also an external liability, that even we are deducting rupees 1 lakh. So the resultant figure is 13 lakh 30,000 is the net assets available to equity shareholders. Once you get net assets available to equity shareholders, now you have the numerator. Apply the numerator in the formula. 13 lakh 30,000 is equals to the value of share is 332.5. So this is the simple way of calculation of value of share, right? This one problem. We'll take one more problem with the different features. In this question, sorry, a company limited comprising capital of 10,000 equity shares of 100 each, fully paid. 10,000 equity shares of 100 each, only 75 paid. In the sense, 25 is still outstanding. That is final call. The net value of the assets is 50 lakhs. Compute the intrinsic value of equity shares. So assets are 50 lakhs. In this case, how to calculate? Because two category shares, both are equity, but one is fully paid, one is partly paid. In this case, how to calculate the value of equity share? The formula remains same, right? So now we need to know the calculation of net assets available to equity shareholders. How to calculate the net worth right? Net value of the assets is 50 lakhs. To this, we will add notional call. Very important, notional call. When this notional call come into the picture, when there are some shares which are partly paid. In this case, 10,000 shares are partly paid. In the sense, 10,000 into 25, still it is receivable. So that is 2,50,000. So we will make the summation. Resultant figure is 52,50,000. So notional call should be added. In the sense, in future we will get this money. So that's the reason we call it as notional call. Once you get this value, then fully paid share value is equals to 52 lakhs 50,000 divided by number of equity shares are 20,000. That is 10 plus 10. Then we'll get the value of 262.5. But this is the value of fully paid. But what is the value of share which is partly paid? That is 75 paid. How much unpaid? 25. So rupees 75 paid share value is equals to the total value 262.5 minus unpaid amount 25. The resultant figure is called as is 237.5. This is the value of share, right? If it is partly paid. In this way we have to solve. I hope I have given you good information about the valuation of shares. Two problems. Down the line I will be making more videos of earning capacity method and the university level questions wherein you will be asked to calculate all the methods in one problem. So such problems even I will take up, right? So I wish you all the best. Thanks for watching the video. Do subscribe my channel, Mentor the Trusted Guide, and motivate me to make more qualitative, informative videos. Thank you very much. Your subscription is very significant, right? Thank you. All the best.